Hi everyone, today we're going to be going over the Bitcoin funding rates chart and how you can use this tool to help improve your Bitcoin investing and analysis. This chart, as well as many others, are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it is released. So what is the Bitcoin funding rates chart? Well, to understand the Bitcoin funding rates, we need to understand derivative contracts and specifically perpetual futures contracts. Now this is explained a little bit more in depth beneath this chart on the Look Into Bitcoin site, but perpetual futures contracts are futures contracts which you may already be aware of, but perpetual futures contracts never actually expire. So traditional futures contracts have a set expiry date that may be weeks or months or even years in advance, but perpetual futures never actually expire. So in theory, traders could buy a perpetual futures contract and hold it indefinitely. Now this perpetual futures contract is trying to give traders active exposure to Bitcoin, but while being able to utilize leverage. So leverage trading, if you weren't already aware, is essentially trading with borrowed capital. And traders do this to gain additional exposure to the underlying asset and potentially gain more profit from its moves, but at the same time also give themselves additional risk if the trade goes against them. So the way these perpetual futures contracts are priced is to try and mimic the underlying price of Bitcoin as closely as possible. However, as these aren't actually tied to any actual underlying Bitcoin, the prices can sometimes get away of these perpetual contracts from the underlying price. And this is where the Bitcoin funding rate tends to alter. So for example, if we see periods where the funding rate has largely increased and is positive, indicated by these green bars, this shows us that the perpetual futures contracts have moved to a price higher than the underlying Bitcoin price. This is due to the fact considerably more traders are trying to long the asset than short the asset. And the same can be said for the downside. Once we have these negative funding rates, these indicate that a majority of traders are betting on the Bitcoin price going down. They're trying to gain exposure by shorting the market and potentially on leverage by borrowing capital. So how can you use this tool to help improve your trading and investing? Well, the funding rates chart gives us a good indication of the current market sentiment and where traders are positioning themselves. On this Look Into Bitcoin chart, we actually have the option to isolate by exchange. So we have 5 different exchanges here that you can choose, but for now we'll just stick to the average, which is just the collated average of these funding rates across the 5 exchanges. And we can see when we have these red negative funding rates, these indicate that a lot of people, a majority of people, are trying to short Bitcoin and can often indicate that prices may be a little bit oversold. So as we can see from a few examples here, when we have these big downwards funding spikes, these big red columns to the downside, which show us that a vast majority of traders are trying to short the asset, that potentially we may be due a rebound. And the same can be true for these green funding rates. Once we have exceptionally high funding, this can usually indicate that maybe people are getting a bit too excited, the market may be slightly overheated on the shorter term and may be due a little bit of a correction. Now, as I said, we can isolate by exchange if rather than seeing the average funding rate you wanted to isolate towards Binance or FTX, for example, that is possible. But what we can also do is change the underlying denomination of these funding rates. As many exchanges allow these perpetual contracts to be traded with either USD or some stablecoin, we can also trade them with the underlying token themselves. So for example, once coin is selected, this would be using Bitcoin as the underlying collateral for the trade. So to open a perpetual futures contract position, you have to be able to put up a certain amount of capital to allow the trade to remain open. So we can actually see there is a slight bit of disparity between the funding rates on coin futures and USD futures. We can see with the currency selected to coin, when we get these big red wicks to the downside where funding rate has decreased and is substantially negative, a lot of people are using their Bitcoin as collateral to bet on Bitcoin going down further. Whereas again, when we get these big green spikes, this indicates people are willing to bet their Bitcoin in the hopes of gaining more Bitcoin as the trade goes in their direction. So as I said previously, the best way to use this funding rates chart is potentially in unison with other analysis you're doing and can give you some good insight on potentially some shorter term time frame trades to be taking, or either to help in your longer term investing to potentially help find great areas to pick up some discounted BTC when either the funding rate is especially negative and a vast majority of traders are trying to short the asset, and the same is true when the funding rate is extremely positive. When we see exceptionally high funding rates, a vast majority of people are willing to pay money to keep their long positions open. This is usually a good time to consider profit taking. So just to summarize, the Bitcoin funding rates chart shows us the relation between the price of the BTC Perpetual Futures contracts and the underlying price of Bitcoin. To trade these derivatives, traders may be forced to pay regular funding to keep the positions open. This is usually 8 hours but can vary exchange by exchange. Some of them are on a 24-hour basis and some are even on an hourly basis. So every hour, every 8 hours, every 24 hours, however long it may be, traders may have to pay this funding rate to keep their positions open. So for example, a positive funding rate indicates that a majority of traders are long in their Bitcoin bias. They're betting on the Bitcoin price to increase and are willing to pay funding at set intervals to keep their position open. However, in these circumstances, traders that are currently in a short position with positive funding will actually receive this funding for keeping their positions open. The opposite is also true for when funding is negative. With a negative funding rate, people in short positions are actually having to pay funding just to keep their positions open, whereas those who are taking the contrary trade, trying to long with exceptionally low funding, negative funding, they will actually be receiving payments via this funding rate. If you like this video, then please visit lookintobitcoin.com. As I said, the Perpetual Futures contract and their underlying logic is explained in a little more depth on the Look Into Bitcoin site. Here at Look Into Bitcoin, we use market data to try and provide you with an edge by highlighting when emotions make so many market participants take poor decisions with their Bitcoin trading and investing. Don't forget to like and subscribe to the channel to learn about all our other charts and gain even more market insights. Thank you very much for watching, and I'll see you in the next one.